All right. Hello guys, hello. Welcome to Wednesday's stream. So if you guys didn't know already, I have changed my streaming schedule from Monday to Wednesday. So today's Wednesday, so we are streaming. Let me check if my audio is okay. Okay, perfect. All right. So, as it says in the title of the stream, let's try to answer this question. Are we in a stock market bubble? So personally for me, I would say that we are. We're in the very beginning of a stock market bubble. If you guys haven't even been thinking about a market bubble, but I would say that we are. We are at the actual beginning of a market bubble starting to form. Now, I already have a general idea as to when this market bubble could be quote-unquote popping, and I've already mentioned it a couple times before, I think the last 3 months or so, that I would be expecting some sort of a large market correctional move to the downside around early to mid next year. So mid next year, but in the early innings of mid next year is what I meant to say there. And the reason being is that I think the markets will react very harshly to the Federal Reserve Chairman's Jerome Powell's absence. Well, he's going to be leaving, and there's going to be a new person coming in, and that person will most likely going to be someone who will definitely cater and cave to President Trump's demands, right? And so if you don't have an independent Federal Reserve, that will most likely cause a lot of volatility and uncertainty within the Federal Reserve itself, which will cascade down to the markets, right? And just the overall financial global markets. So that should definitely have an effect. And that's where I think is going to happen, since I believe Jerome Powell leaves his position in May after serving 2 full terms, and it'll be interesting as to see who's next. But definitely for sure, it's going to be someone who will be a lot easier to control from Trump's perspective. Okay, so with that being said, the markets are continuously moving up higher and higher and higher, and we're continuously seeing these shallow pullbacks that are very, very quickly bought up, as if nothing has occurred, right? As if these pullbacks are just a thing of the past, because in the next couple of days after the pullback, the initial pullback, the markets completely recovered the gains, and we are right back to all-time highs. So that has been the entire pattern for the month of August, and it's still a pattern for the month of September. Now, here's where things can become a little bit more complicated and volatile, depending on your time frame, right? So when it comes to the month of September alone, we should still be seeing another pullback, which could be a little bit bigger than the pullbacks that we've been seeing for this entire run up since April, right? So we've been having very shallow pullbacks, like here, over here, right over here, here, and here, right? Or even right here as well. And they're very, very shallow and also very quick, right? If you guys haven't noticed. And in September, most likely the latter half of September, and again, what does that mean? Well, that means we're going to be past the FOMC meeting for September for this month, and we'll be past the triple witching OPEX event as well. That's coming up too next week. And so once both those two very big catalysts are over, we will most likely see this pullback occurring where we should be seeing a bigger pullback compared to all these previous, well, they're very recent, but previous shallow pullbacks that we've seen so far in the month of August, in the month of June, and month of July, right? And this also aligns with the seasonal trend of September having a weak performing, a weak performance, I should say, in the latter half of this month. And so that really just aligns with all the catalysts that we're getting, especially as we head into the last inflation report, and the most important one, the CPI report tomorrow. So this is a good segue now into what I think about about inflation. Right, PI inflation came out, and it actually wasn't that bad, right? In fact, for the first time in a while, we actually didn't beat expectations or even meet expectations or come in line with expectations. And why was that important? Well, because every single expectations in the past PPI and CPI reports have been over the previous month's readings. And so it was kind of a relief to see that the PPI report showed that the actual data was slightly lower than the actual the expected value compared to last month's reading. And so even though the general trend so far has been to the upside, it was nice to see a little downtick. Now, here is where this could become a problem, because tomorrow when we have the CPI reading 30 minutes before market open, or excuse me, an hour before market open, we might be seeing sort of a market, because you know, if markets are already priced in the fact that inflation is going to continue to go up, all we're waiting on is the Federal Reserve. I mean, that's what I've been saying since the beginning of summer, right? Since June, since May as well, that we should be continuously moving up higher as we head into the eventual recut, right? Where we come out this pausing period that we've been in for a year now. Well, almost a year, and we can start to see the markets continuously climbing up higher in anticipation for this recut. And so, you know, even if the inflation report comes out in a very similar manner, where the actual data is either slightly below expectations or really below the expectations, which will be obviously a great sign to see. But again, the general trend is what for inflation, guys? It's been up, right? We're starting to see inflation rising again, right? And we're starting to see this deflationary process slowly ending, and that's not a good sign, okay? And we continue to see a lot of signs of stagflation. And for the fact that even today, if you guys did not see my my Instagram story where I reposted JP Morgan and Chase's CEO Jamie Dimon quote about where he thinks the economy is going to be at, where he said he doesn't really know what's going to happen, whether, you know, we're going to have a recession in the next 6 to 12 months or whatever it is, right? He doesn't know, and I think that's a telltale sign that we are most likely headed for stagflation, because stagflation really causes a lot of confusion. Because there's a lot of weird components that drive this economic stagnation. And again, if you guys don't know what stagflation is, or stagnation in economic terms, make sure you guys just quickly Google that. Okay, the Google will tell you exactly what that means. And so, again, with the labor market significantly weakening and all these revised numbers pointing towards the labor market completely deteriorating for the last couple of months, especially for the summer months, and inflation starting to go up, and for the fact that the unemployment rate has officially broken out of its 4% to 4.2% range that it's been holding for I believe for almost 2 years now, if I'm not mistaken. And the fact that we've actually achieved a 4.3% unemployment rate makes me think that we're going to be achieving that 4.5% unemployment rate very, very soon. And if you guys remember, I stated that in 2022 that if we come back down, and obviously in 2023 as well, in early 2023, I said if unemployment continues to go down, we might see unemployment coming back up to 4.5% to even 5%, along with inflation going back up to around 3%, and possibly the Federal Reserve will have to change their inflation target from 2% to 3%. And guess what? That first part of inflation, right? Basically, the last FOMC meeting, and based on what the Federal Reserve members and governors have been talking about, and what their rhetoric have been individually for their own speeches, and where they speak at forums, have been basically telling us, the public, that they have kind of revised their inflation target because they kind of have been forced to do that due to these tariffs and the global uncertainty around the global trade war that President Trump has started and began since January and February. they have been forced into this position where they have to move the inflation target to 3%. Now, obviously in 2022, I didn't know that there were going to be tariffs, but I said that something could trigger the inflation target from the Federal Reserve to move up to 3%. And so I think that's our reality now. I don't think the Federal Reserve is willing to say that that is a for sure thing in this upcoming FOMC meeting and obviously Jerome Powell's news conference, but I'm pretty sure that is already on the table, just like with this rate cut, so this recut, to bring us out of this pausing period for rates. But again, the benchmark interest rate is still high, to remind you guys, right? It's still at a relatively historically high area, and if you do get this nice cut, it's still going to be high, right? But we can also see some very, very good, demand for refi, right? For mortgage refinance, and we might be seeing some of that demand coming back for mortgages as people have been, patiently waiting for the last 4 years, right? 3 to 4 years waiting until the benchmark interest rate can come down, right? or the federal funds rate can come down. Again, those are two synonymous words if you guys didn't know. So, that's kind of the reasons why I think in the last half of September here, we can be seeing that move down in the markets, especially even if tomorrow, guys, if we do see a reaction, right? If we do see an actual, let's say, okay, so let me give you guys a scenario, right? So if we do see a gap up tomorrow because of the fact that inflation is slightly below the expectations, just like what we saw with PPI, from the PPI report today, I think we're gonna come back down and start to fill in that gap, okay? And who knows, we might actually be seeing another down day tomorrow, a larger down day tomorrow compared to what we saw today. And again, today was not even that much of a big down day compared to the previous pullbacks that we had. But again, tomorrow has a huge catalyst, the inflation report, right? CPI. So to me, this screams the possibility that if we do have a gap from this inflationary report, this inflation report from the CPI report, we should start to move down, and maybe we can start to move down a little bit more into the Federal Reserve FOMC meeting that will happen and occur next week. Okay, it might be an early sign, an early warning sign tomorrow if we do see a down day. Okay, so and I believe even today there were some hedges being opened with some VIX calls hitting the tape as well. A lot of call activity on the VIX that goes on to like I think the October expiration as well, and some September, the end of the month September expirations. I think September what is it, 26th, right? So to me this is kind of, hey, what's up guys, welcome in. So you guys have, for people who are just joining in, you guys kind of missed out most of the juicy details that I've just been talking about, but again, you guys have the replay to watch before the markets open tomorrow, which I highly recommend you guys to do. Okay, so to me, I think again, I still think that this pullback is going to occur, and it'll all come down to the actual event of the FOMC meeting and the OPEX, the triple witching OPEX catalysts. Okay, so please keep that in mind. And again, I answered the question for this week's live stream. Okay, and I've also talked about the fact that again, just as a quick summary, I've also talked about this for the last 3 months, right? Once Jerome Powell leaves next May, I think this bubble can pop. And again, why? Because Trump will be putting in someone that will easily cave and cater to him, because he's been wanting that, right? He's been wanting that since ever since he took office, and even his the people around him, the cronies around him, right, have been wanting that as well with the Federal Reserve. And if he does achieve that next year in May, it's gonna be interesting to see, because that means Trump is gonna effectively have all control of government, since he does practically have all control of the government, all three branches, right? Legislative, judicial, and executive branches. And so it's, again, it's quite a state we are in right now in the United States. Not even just from a political perspective, but just the fact that in this society, in this economy, in this modern age, that the US will be such under siege of its democracy, right? So, hey, Andino, what's up? So you said Lumen, so Lumn, Palantir and Lumen Technologies. Oh, okay. I didn't see that. Okay, I'll go over that. So, you know, so this is all kind of. I feel like the markets will reel at the effects of what's happening right now in the United States. In next, at least by next year, and this bubble will pop eventually by the early innings of mid next year is what I said earlier as well when I began this live stream. Okay, so yeah, so you know, I kind of want to give you guys that outlook for tomorrow and for the longer term perspective. And again, I've been talking about this longer term perspective for like 3.5 months now, right? But again, I've also told you guys that shallow pullbacks will occur and will be very quickly bought up as well. Okay, and that's exactly what we've been seeing for the last 3 months since June. Okay, we've had multiple pullbacks, right? But they've been rather short and they've been bought up very, very quickly. Okay, so with that being said, let me give you guys some levels for tomorrow. Okay, so SPY, if you have that, again, that kind of a bigger down day tomorrow, if we have very nice you know, gap up like I've stated a couple minutes ago, and then you said, thank you, I like the background tunes. You're welcome. I'm glad you like the tunes. Okay, so I'm trying to make sure it's a very, very calm and very nice and chill vibes here, right? As usual. So, you know, I think if you do have that massive move up, or not really massive, but just an overall gap up, we can see another down day tomorrow. And if you continue to move down, the first major support area on the S&P 500 ETF or ticker symbol SPY will have to be around 486.50, or if you just want to round all the way down to the whole number, just 646, excuse me guys, 646. Okay, but the exact level that I'm looking at will be 646.50. Okay, and if we break below this tomorrow, or even just into the end of the week, then we have 640 to target as well. Okay, this is another major level at all-time highs. But again, we have these three levels here on the daily time frame that I'm showing you guys right now: 646.50, 640, and 636. So I don't know if you guys want to have it on your own time frames on the daily time frame for SPY, but make sure you guys do have it there. But yeah, so these are the levels. Very, very simple. Keep it simple. You guys don't want to be, you know, making things too complicated, especially when we have volatility waiting for us, especially with the triple witching OPEX, and also for the fact that we'll be seeing a lot of volatility for the FOMC meeting itself. So please keep these levels simple as per usual. Okay, now to kind of summarize what I've said so far. Okay, what we've been seeing so far with the anticipation of this recut, okay, is bonds, right? Yields have been surging downward while bond prices have been surging upwards. Finally, we've been out of this deadlock that we've been seeing for the last 4 months, okay, or at least I'll even say, well, this entire year, actually, right? If we're just considering this fiscal year alone, bond prices have not moved or have gained any upside at all, right? And they're still in the negatives. So, well, not in the negatives, but they're, from a technical perspective wise, the trend hasn't fully changed or converted yet to the upside, because we're still in the price ranges that we saw in February, right? And even just last year in December. So again, nothing has really changed, but there is a quite a character change for the last couple of trading days, which again, this is clearly telling us that most likely, like I said earlier as well, just disregarding the ifs, right? The if situations for CPI, I clearly stated that we'll most likely not get a reaction to inflation, the CPI report tomorrow, just like we didn't really get too big of a reaction to PPI's the PPI's data, right? And again, obviously we had a gap up, but how do we close today, guys? Or how do we close? We closed kind of unchanged, right? We moved down and we kind of, well, we erased all of the gains that we saw early in the morning, right? And we ended up just at 0.29%, okay? And we could have closed lower, okay? And so tomorrow, if you do get that no reaction, okay, I'm going to expect bond prices to continue to move sideways here like it did today. Well, there's a nice small pop, but we are starting to consolidate here after a massive 3-day move last week, obviously, right? 3 trading days worth okay, of price action that moved bond prices to the upside. And to me, even today's action, right? Even this nice, very, very impulsive pop up to $90 here on TLT, it's clearly indicative to me that the inflation report will most likely be ignored. And again, with that if situation where I said that the markets could gap up, I still think that we're going to be seeing the gap up being completely filled in, just like what we saw today as well with the PPI report. Okay, so I'm expecting very similar price action, volume, and overall sentiment and vibes for the markets. I'm literally saying vibes, right? Because I think the markets, again, bond markets and equity markets alike, are just simply waiting for the word of the Fed. Okay, and we are dying to see this rate cut and what future rate cuts hold and what they have on the table, whether it be a 50 BP rate cut, 75 BP rate cut, or another 25 BP rate cut. Who knows, right? We just want to see what they're saying, and once they do say it, then the markets can react in a very volatile manner. Does that make sense, guys? Okay, now drink some water here. With this bond action, okay, you guys should be watching IWM, small caps, right? So small caps have been on a tear for all of summer, and there's a reason why, and that reason should be very obvious because, well, the anticipation for rate cuts are coming, right? And they have been coming. And IWM, MDY, so small caps and mid caps have been absolutely on a rager, and it seems like based on option flows, we should continue to be seeing small and mid caps continue to surge, and that is where I think small caps and mid caps can overall contribute to the burgeoning of this and propagation of this entire stock market bubble that I think we're in the early innings of, and that we're currently in now, right? But we're in the early innings of the stock market bubble. So, you know, if we do see the overall small cap and mid cap asset groups seeing massive explosions to the upside, literal explosions to the upside into the end of this year, that will further my suspicions that we are most likely headed for a stock market bubble pop and a crash somewhere around the early innings of mid next year. Okay, so you know, make sure you guys remember this, right? And write it down, and make sure to not forget about me from what I said tonight. And obviously, I've been saying this for the last 3 months as well already. That I'm thinking that we'll be seeing some sort of a market crash in mid next year. But as things become a little bit more clearer, and especially once we get the word from the Federal Reserve and Jerome Powell next week, I'm going to be expecting to see small caps and mid caps surging to the upside. I'm a bit biased because we opened up a position this week as well. And if you guys want to know what that is, make sure you guys join the CFO Discord, which you guys can join by becoming a member and reader of the CFO Swing Watch report. So make sure you guys check out the link down below for that. It's the very second link. It's very hard to miss. Okay, so IWM, I think, has a lot of opportunity here. There's a lot of small cap tickers that I'll be personally looking at, and I will be sending out those trade ideas and swing trade ideas in the private CFO Discord. So again, if you guys want to know what those are, make sure you guys join the private CFO Discord chat room by becoming a reader of the CFO Swing Watch report. Okay, so let's see, Andino, let's take a look at LUMN. Whoa, I see. So Lumina, I know this was very popular back in COVID times. Yeah, look at that. So this one fell from highs here. Yeah, look at that. All right. So this one is still, well, it's now not a penny stock because it's out of the $5 range now. But there's this partnership or deal sounds pretty interesting here. I need to read into it more. I haven't seen this today at all, but I think Lumen, just based on this deal alone, just the retail power that Palantir has, will most likely drive LUMN higher, possibly into maybe even $7, 7.50. This is a major level of resistance around this level here, right? So I don't know exactly the short flow or the short interest percentage on LUMN or Lumen Technologies here, but I'll most likely read into this further. So thank you, Andino, for this quick shadow of this ticker. Let's take a look at the market cap of this company as well. Okay, yeah, so this is a mid-cap company, and this one will also most likely benefit greatly to the overall small to mid-cap a surge or explosion that I'm expecting to see by the end of this year. Okay, so make sure you guys are taking note of this, right? I think we really are seeing a lot of divergences across the markets right now, but the bond markets are clearly telling us a clear picture as to what we should be expecting in the equity markets, specifically regarding small cap and mid cap asset groups. Okay, does that make sense, guys? Hopefully that makes sense. All right, so okay, there we go. I see you guys your little emojis on the in the chat room there. Okay, so yeah, so that's kind of it, what I wanted to just talk about for tonight. I mean, I don't really have too much else to talk about. I just really wish that you guys remember what I told you guys tonight for the short-term, mid-term, and long-term future. And Timothy, thank you for that goat emoji. You always send me those goat emojis, so thank you. Okay, so you know, the markets are definitely turning to a very interesting phase since I've been watching the markets for 8 years now. So, you know, I think there's a lot to learn in the next few years, and also a lot of challenges to be looking forward to as well. And you know, there's a lot of people talking about what we're going to be expecting, a lost decade of sorts in the next couple of years. Well, it will start in the next couple of years is what I meant to say, this lost decade, where we just don't progress at all in the overall markets. And hey, that could be a real possibility when every economic indication is starting to show real signs, you know, actual data that we're going to be in an economic stagnation, which sucks because we were just coming off of a cooling period, off of a very nice growth economic period, right? And I've been talking about this since 2022. So, and mostly the entire year of 2023. So, you know, again, it is what it is, right? If you have an economic stagnation, if we do see actual stagflation, and if the Federal Reserve decides to identify it that way, you know, by next year, who knows, right? It's going to be very interesting. Okay. Of course, Indino, you're welcome. Okay. All right. So, well, that is it for tonight, guys. Excuse me. Hopefully you guys have a great trading day tomorrow. I'll see you guys on the new scheduled time and date, Mondays and Wednesdays, okay, next week. So again, I'll see you guys Monday next week at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. All right. And again, if you guys really want to know what those swing trade ideas that I have for my private members and readers of the CFO Swing Watch Report, make sure you guys click the second link down below to learn more. And obviously you guys can choose to become a subscriber using that link, and you guys will automatically gain full access to the private CFO Discord chat room where I will be personally sending those small cap to mid cap swing trade ideas. I already have them in mind, I just have to send it out. And so if you guys want to see that before I send it out, make sure you guys become a member today. All right, have a great rest of your night, and I'll see you guys on Monday night. Thank you so much for watching.